If you're anything like me, I have a limited amount of funds available to invest each month. I almost always have to decide the best place to put my money at any given time. We all know the goal is to buy low and sell high, and preferably purchase assets that have tremendous value to the upside. But what happens when it seems like all you do is buy low and the asset never seems to move higher? This is when silver makes most of us scratch our heads. This is especially perplexing when you watch his older brother reach all time highs over and over again. It becomes very easy to lose faith in silver, especially after years of hearing people promise you that it was going to go to the moon. If you simply look at price, there's almost no question that gold is a better investment, which means I must be crazy to suggest that silver is better than gold. But it is, and I'll prove it with facts and numbers, not hype or pipe dreams, because pipe dreams are for potheads and people that play the lottery. What is good, Stackers University? It's so good to have you here with me today. It's been an incredible week in the metals. While gold has definitely stolen the headlines, silver has been quietly doing its thing. Gold reached a high of $3,014. It's no wonder why it's still in all the headlines. But silver had a week as well. It gained over 4.4%, which is actually double the performance of gold. Yet gold gets all the attention, of course. And if you look at the numbers, it's clear why gold does. After a 575% increase versus a 356% increase over the last 20 years, of course, gold's going to get all the attention. On top of that, we now have new price projections for gold reaching as high as 3,500. Jordan from over the Daily Gold has pointed out that gold has officially broken out against the 60-40 portfolio, indicating that the stock market bull market is over. With all the great news about this, silver is just kind of doing this thing. So, how in the world could I say that silver is better than gold? The way that I'm defining better is much more about the short term, meaning the next 3 to 5 years. You can go back and watch some of my older videos, but my message has been consistent from day one. I think all stackers should start with a base of silver, anywhere from 250 to 500 ounces, because of all the things you learn during that process of stacking those ounces. Stacking silver first actually makes you a better stacker in the long term, regardless of the metal that you stack. Once you have a base of silver, that is when I think you should focus and turn towards gold, because no matter what, gold always leads a bull market in precious metals while silver lags, and gold is always just gold. I love this approach because it allows you to stack gold while it's cheap, similar to what we were doing when gold was between 1700 and 2000. And then as gold starts to appreciate and get expensive, you then switch over to silver, which typically isn't like as likely to have run or to have as much of a price appreciation. And this is where we are right now. This is just one of the many reasons why I believe silver is better and better positioned for the short term. If you've been around this channel for a while, you know that I'm far from a silver perma bull. And I'm not just saying this for likes or views. Let's dig into a little data that I grabbed just so you know I'm not making this up. Much of what I'm going to share comes from Tavi Costa, and you should definitely be following him on Twitter. Look at the history of the US dollar cycles. What's important here is to notice the previous stock bubbles and what happened to the dollar. Now, notice the tech bubble 2.0, which leads us to believe that the dollar is going to weaken. Coincidentally, what does Trump want and need? A weaker dollar. What happens to assets that are priced in dollars when the dollar weakens? They go up. So we should be expecting stronger gold and silver prices in the future. The next slide of the US dollar index only reinforces this same idea. In the past, I've shown you the real assets versus financial asset ratio chart, but this time I want you to look at the commodities to equities ratio versus the dollar. Look at that alligator mouth and what has happened at the extremes. It always closes, which is great news for silver and gold. Next, let's look at the cup and handle chart for silver. This thing is a thing of beauty. Silver has quietly been doing exactly what we would have expected. I know it felt gut wrenching to watch those pullbacks, but I kept reminding you that technically silver was still good. I know it feels good to watch videos day after day about the daily gyrations of the market. However, our time is short right now, and the window will continue to close, which means you have to be taking positive action every day. We know the outcome. We don't need the crazy predictions. What we need is focused preparation and action. Please take this as my warning. When gold and silver take off, it will be because we can no longer kick the can down the road financially as a country, and everything will be falling apart around us. This is when your metals will become incredibly valuable, and you will come to the realization that no matter how much you have, you still don't have enough. If we know this, then our responsibility today is to get our hands on as much as we can right now. Forgive me for getting on my soapbox here, but this is why, in addition to metals, I preach financial wellness over and over again. You may remember the Stacker's Wealth Pyramid, and the base is your personal finances. We know what's coming at us in terms of the economy, so it's critical that we build a strong financial foundation, which I call the stacking to financial wellness period. It all starts with your mindset, goals, and budgeting as you move to more tangible goals like building your savings. It's all about what Professor Benjamin talked about as inspired action.
Hey everyone, welcome back to Money Minute, your quick dose of inspiration and tips to help you crush your financial goals. Today, let's talk about something powerful: inspired action. When you set a goal, it's easy to get caught up in the details and the how, but inspired action is about taking steps that feel aligned with your vision. It's not about pushing or forcing things. It's about flowing with purpose and confidence. For example, let's say one of your goals is to pay off debt. Instead of focusing on how overwhelming it might be, inspired action could be as simple as setting up an extra payment this month, even if it's small. It could also mean making a phone call to your lender to negotiate a lower interest rate, which would then free up funds to pay down your balance faster. So as you work towards your goals this week, I challenge you to take at least one inspired action step.
Let me say this in plain terms. We are approaching a generational opportunity and a global shift where wealth will be transferred to those that are prepared and ready. So just don't screw this up, folks. If you need help, book a free consult. The link is in the description, and we'll be there like AAA. We'll give you a free jump start to get you going. Let's talk about the gold to silver ratio. And historically, I have railed against the gold to silver ratio because I don't believe it provides the information we think it does when it comes to buying gold and silver because of premiums. We will need to save that for another video, though. With that said, I do believe it's helpful when it comes to understanding the trend and the times when silver is set to outperform gold. And this chart really drives this point home. Historically, we don't spend a lot of time above an 85 to 1 ratio. And when we do, we can typically expect a return to around 50 to 1. In fact, the ratio has averaged around 45 to 1 since 1970. So let me give you a sense of what this means in terms of performance and not the hype that you hear. Looking back at the 2008 GFC, the ratio hit 85 to 1 before dipping back down to 32 to 1 just 2 years later. This meant silver outperformed gold by nearly 165% during that period. So let's be conservative and say the ratio drops from 80 just to 60. That would mean a 33% gain for silver relative to gold. While I can't say this is an asymmetrical bet, what I can say with reasonable confidence is from this point forward, you are more likely to make more money with silver than with gold. Here's another chart that highlights the recent divergence in price between gold and silver. You can see how closely they track and how that has changed over the last couple of years. Next is this wonderful chart from Michael Oliver where he tracked silver price as a percentage of gold price. What he found was that the average for silver was 2% of the gold price. The chart also highlights how the percentage has gone as high as 6%. Now, I'm not saying it's going to go to 6% and that's in the cards, but I am saying it is likely that it will at least return to the average, which again means silver will outperform gold. This ultimately means if your measuring stick is performance in the short term, silver is definitely better than gold for the next part of the bull run. At the same time, if you don't like the volatility, then consider that the extra gain may not be worth the extra stress. Now, give me a few more moments to make a couple of other points for you to consider about why this seems like such an asymmetrical bet. Open interest. Open interest measures how many future contracts are currently active. And right now, silver has open interest is up 22% year to date, while gold's open interest is actually declined by 5%. And so, open interest combined with increased prices is often a sign that institutional investors are positioning themselves for higher prices. So, the next thing I want you to consider is this fact that I found from Mike Maloney's channel that over the last 340 years, silver has only been this undervalued compared to gold for less than 1% of the time. So let's not forget that the prices of metals were controlled until the 1970s, which only makes this moment in time that much more amazing. Let's take a look at the technicals. It's important to note that silver just broke through multiple levels of resistance and experienced a golden cross with the 50 and 100-day moving averages. This is tremendously bullish. As we wrap up, we all know that I can't make you any promises. And if the last few years haven't taught us anything, it's taught us that markets take a lot longer to do the things that we expect them to do and to even get started moving. The good news is the markets are now moving. Gold is outperforming the 60-40 portfolio. We're seeing a rotation out of stocks. The gold to silver ratio is in favor of silver. We have technical indicators supporting silver. Open interest is shifted, and market makers are shifting metal around the globe to meet demand. Gold has done exceptionally well and has had a great price run and will continue to run very well. At the same time, it's incredibly hard for me to buy gold at 3,000 ounce when I was just buying it for under 2,000 ounce a year ago. Not only is silver budget friendly in the $30 range, it's incredibly cheap. And our best money is made when we buy things that are undervalued and we wait for the general public to pile in and make them overvalued. There's no question in my mind that silver is the better buy right now. In the comments section, do you think silver is better than gold in the short term? What data or chart did you find most compelling? What is your biggest concern or fear as a stacker? Or you can simply put an A plus in the comments so everyone knows that you always stack smarter and never stop learning.